Now, let's also talk about if somebody wants to get a mortgage for an Airbnb property. Now, I know when it comes to Airbnb, rules can be very different from state to
Mhm.
county to city, especially where we live here in Las Vegas, where so much of our economy here depends on travel, tourism, and
Yeah.
that kind of thing. So, obviously lots of the local laws can vary a lot. But I mean, if you had to talk about, give some advice to someone looking to get a mortgage just for an Airbnb property, what would you tell them?
Well, first I'd ask the questions. Okay, so on this property, are you getting it just to Airbnb? So is it going to be Airbnb the whole time you have it, or are you getting it to use for your property sometimes, and then when you're not there, then are you going to Airbnb it? So
Right.
like it's a different in low programs depending. So if it's a house that you're going to use, let's say part of the time, let's say a couple weeks or 3 or 4 weeks at a time, and the utilities are going to be held in your name, but you're going to Airbnb it, then
Mhm.
because you're going to be living in that property when you come to vacation here, then it would be considered a vacation property. So that's
Hmm.
a different loan program.
Okay.
But if you're going to use it straight for investment property and you're going to, rent it out all the time and never going to be in it, then that's an investment property that
Hmm.
you would be doing on the Airbnb. So it would be a matter of digging into, what the situation is with the
Right.
person that's going to buy the house.
And then, but within that, I mean, how often do you need to be there for it to be considered vacation versus purely investment? I
Mm-hmm.
mean, is there any kind of guideline, or is that also just state
Yeah,
to
for a
state?
vacation property, I believe it's 4 weeks that you have to be in the property out of a year
That's it?
to be in a vacation. Yeah.
Oh, geez. Because,
Hmm.
because here, especially here in Nevada, we get a lot of people from like the Midwest who are here part of the year and they're somewhere else part of the year and that kind of thing. So, I mean, so generally it's only about 4 weeks of the year. So,
Hmm. So, like, even if it's a primary residence, you'd have to be there 51% of the time.
right.
So, and you'd have to be able to show that you're there 51% of the time. But second home,
Mhm.
it's more used for vacation and that kind of stuff. So,
So,
yeah,
I mean,
that was a good question.
so it wouldn't be uncommon. I mean, if you had the money, you could have, I mean, your primary residence, you could have 2 or 3 vacation homes that you could visit throughout. I mean, you only got to be there about 4 weeks a year.
Hmm.
So, I mean, if logistically you can manage, you could have multiple vacation homes,
Yeah.
and you would not have to pay investor interest rates
Yeah.
on them as
The only
Airbnb.
thing is a lot of times on the Airbnb, it's hard to qualify with the income that you make off of it until you've had it for a while. So, you'd have to make sure you make enough income. Like when you're buying an investment property to rent out,
Right.
you can use the rents that's going in that area to be able to offset your debt ratios,
Oh, but not with Airbnb.
but not with an Airbnb. So you have to make sure that you make the income to qualify for where you're living right now
Mhm.
and the new house too.
Jeez, that's pretty good.